Hello everyone, thanks for joining us today and welcome to this educational presentation of Are You Trading Candlesticks Entirely Wrong? Now the reason why I ask this is because I often get a lot of students and potential students ask me questions. They say basically, Steve, what am I doing wrong? I've been taught candlesticks and I've gone through all the classes and taken all the courses online and gone to the seminars and read the books, but it just isn't producing the results I want to see. Now, I would venture to say the majority of all traders do use candlesticks or have used candlesticks in some capacity with their trading, regardless of market or regardless of time frame. But most people are getting just about the same results and they're not very good. Let's start out by getting the standard definition of what candlesticks actually are. And this is the way I was taught as well some 4 decades ago. Candlestick patterns are reversal patterns, usually occurring at the top or bottom of a trend. So this is the way we're supposed to be using them. Perhaps you're using them incorrectly, but this is traditional way of using candlestick patterns. For example, if we look at this chart that's rather up to date here in Snapchat, this was the darling of the new IPOs a year or so ago, but as we see, it's been going lower and lower. Let's say you're interested in investing in this, you think the company's going to turn around, or you think it's a great short-term trade, and you see here that you may have some support. Perhaps you follow the institutions or the banks and what they're doing. Maybe they've bought here on this little double bottom. And after all, since we are trading candlesticks, this actually shows that we have 2 bullish engulfing patterns right side by side. So that's a very bullish view here. So you jump in and decide to invest in Snapchat, and then this happens, okay? Look familiar to anybody. Now it works the other way as well. We see Apple here. This was just in the end of summer in August coming into September. It had a nice gap up, probably on some good news, but you feel that perhaps it's too overbought. Maybe all the indicators you watch are tremendously overbought, and you think it's going to come down, maybe fill that gap at the bottom there, and that's where you want to buy some. So rather than look to buy it, you actually see that there is a bearish engulfing pattern right here, right? Now that's at the top, the very top of that move. That's the way you're always taught. Remember, the standard definition says that they're reversal patterns. So most likely, price is going to reverse. So it's a good point to sell right here. So you sell, maybe you buy some puts, and then this happens, okay? This is the way most traders trade candlesticks. They're not getting the results they want, but they're following all the traditional rules. And most traders come to me with their hands up in the air saying, Steve, what am I doing wrong? And this lends us to ask the question today to all the attendees. What are you doing wrong with your candlestick trading? Because after all, they've been used for years and years. Why aren't you getting the results you want? Well, usually the answers are really simple. I'm going to show you how simple it is just to correct it so you can get back on track with your candlestick trading. And you're going to see by applying our new platform how really it's just one click away to get you back on track with your candlestick trading. This is a platform that teaches traders how to trade the markets, and everything is as easy as clicking and seeing what you should be doing. So I'm going to explain all this and put you on the right track for candlestick trading. Once again, thanks for joining us today. My name is Steven Primo. I'm the president and founder of Specialist Trading. And if you're new to our presentations, we are first and foremost an educational company. Our only goal is to simply educate you as a trader. The reason we want to educate you is we feel the reason why most traders fail is because you're investing too much time and effort and letting someone else determine what you should buy or sell. You're letting an outside source make all the trading decisions for you. So what we want to do is provide you with that education through online courses and through our new platform so that you can, for the first time, be in charge of your own trading. Okay? I started my career 41 years ago on the floor of the stock exchange. I was on the floor for 16 years, and 9 of those years I was a specialist. That's where we get the name Specialist Trading. So I made markets in roughly about 50 or 60 stocks during the crash of '87 and the bull market that followed. And if there's one thing I've learned, it's that most traders love to take themselves out of the game. They want someone to make the decisions for them. And this is why it's been estimated that 80 to 85% of all traders fail. So when I say I want to get you back on track, we're not guaranteeing you as an educational company that you're going to retire in 2 years and you become a millionaire. We're just saying we're going to put you on track to become a trader who knows how to view the market and then can make your own decisions, because in my opinion, that's the only way you will become consistent. So we're trying to put the power back in your hand. You'll see how much attention to detail we do in just the short 45-minute presentation we're going to be giving you today. Now, before we begin, as always, we're first required to show you this, so please take a moment to view our disclaimer. I'm going to show you a lot of performance results today using our candlestick technique, but please remember that we can in no way guarantee that any of the results I'm about to share with you will be repeated in the future. And also, please remember that all examples are purely for educational purposes only. So as you're taking a brief moment to view our required disclaimer, I would also like to take this time to invite each and every one of you, if you haven't done so already, to follow us on Twitter. There's our handle right there. I would suggest copying that down, because every day I post new and different information, things to educate you, anywhere from little bits of financial wisdom to actual signals that our strategies have generated. So lots of great free educational information. Feel free to follow us on Twitter. Now remember, as I stated in the opening statements, we are different from other companies in that we are an educational company. We don't promise to have a system or a method that works 100% of the time. We're not going to sit here and tell you if you simply take these trades, you'll retire or be able to go on that dream vacation in the next couple of months. We don't believe in that. What we want to do is provide you with information, the tools, techniques that have stood the test of time, so that you can once again, be in charge of your own trading. As you see here, my goal is not to force feed you signals and to trade for you. A good mentor does not trade for you. He teaches you how to trade. So my goal is simply to teach you how to trade with the specialist edge. It's the same edge that turned my trading around some 4 decades ago, and what has been able to sustain me for that amount of time, and hopefully it will be able to do the same for you. So now, since this is an educational company and an educational presentation, we will be taking all of your questions, but please wait till the end of class to ask any questions. We're a little bit different in the way we present webinars as well, because if we stop the way some other presenters do at every slide, we're going to be here far too long. And I really have a jam-packed presentation for you today. I was kind of overviewing it before we started, and I said, wow, I have a lot of slides to share. So I don't want to take your entire afternoon. I know you want to go back to the markets. So please, if you have a question, many times it'll be answered on the next slide. If not, just wait till the very end of the presentation to ask any questions, okay? The only question I will answer is this being recorded. Yes, it is. So if you have to leave early, or if you're having technical difficulties, please, don't worry. Sometimes if you just turn off and turn on your computer, things will be resolved. But don't worry, we will send everyone a link to this recording. All right, with that said, let's begin. Okay, so we know that the majority of you are probably having difficulty getting the results you're looking for trading candlesticks. So what is the correct way to trade candlesticks? After all, once again, you've probably gone to the online seminars, you bought the courses, you spent a lot of money on a platform or program, and it's just not working the way you'd like. Well, here's what I learned some 4 decades ago when I was struggling, when I first learned about candlesticks as well. Here's what my mentors taught me. They said, Steve, candlestick patterns will have a higher level of consistency if you trade them in sync with the trend. Now, you see, this goes entirely against everything we've been taught. We were always taught to look at them as reversal patterns. Most of the techniques, the patterns are looked as dojis or bullish and bearish engulfing patterns, morning stars, evening stars. They're looked at the bottom or top of a trend. But now this goes entirely against that. It's saying to trade them with the trend. Okay? So let's look at our example again with Snapchat. As we see here, we were looking to buy in a trend that was going down. This was a clear-cut downtrend as we look back in hindsight. And the same thing with Apple. As we look back in hindsight, this was in a clear-cut uptrend, and we were looking to short this, and this is silly. You're really swimming upstream. You're going against the current when you're trying to pick a top and bottom. Every once in a while it will work, but remember, we're trying to instill consistency in our trading. And there's no consistency in picking tops and bottoms and reversal patterns with candlesticks. Take it from someone who's been trading this way for 4 decades now. This is really going to give you a higher level of consistency. Now, if you're looking for ways in which to find the trend, well, everyone has a different way to incorporate what the trend is, okay? You can use indicators, you can use oscillators to tell you what the trend is. You can use patterns, higher highs, higher lows. You can use different time frames. I would say most students look at the daily time frame to make sure it's in sync with the smaller, hourly time frame and so forth. These are all valid ways to find the trend, but it's been my experience that they're often a day late and a dollar short, meaning that they're mostly lagging, and they're not the greatest of ways in which to tell you before a trend has started. Let me give an example here. If we look at this chart here in EDNA, as you can see here, looking in hindsight, you'd say, you know what, this is in an uptrend, and usually around this time right here is when you decide to jump in and buy. So you buy thinking that we're in an uptrend, right? I'm supposed to be going with the trend, and then guess what? This happens, right? So what we need is an early trend detector, something that can tell us far in advance of the other trending tools when a trend is underway. Now, it's not designed to pick the bottom of a downtrend or designed to pick the top of an uptrend. It's simply designed to tell us prior to any of these other techniques when a trend is underway. Guess what? We have a tool like this. In fact, I've been using it for 4 decades now. It's called the PET-D. It's a tool, actually a formula I was introduced some 4 decades ago on the floor of the stock exchange by my mentors. The only trouble is, when I first started using it, I had to calculate this formula every bar because the PET-D is basically a translator. It's translating on a tick-by-tick basis what the market wants to do at any given point in time. So it's really telling you if it wants to go up, it's telling you if it wants to go down, and it can change its mind anytime. But that's okay. Our job as traders is simply just to go with whatever direction it wants to go with, okay? So as we look now, we see here that generic chart that we were looking at earlier would have got us in too late. We would have probably gotten in right when the downtrend had started. But if we simply clicked on our PET-D, which is right here in our green strategy tab on our platform, we make it simple. You don't have to do the formula. You don't have to do the work. Just simply click on the tab and the colors automatically change. Green, a series of 3 to 5 bars means you're in an uptrend. A series of 3 to 5 red bars means you're in a downtrend. So we would have known not here, but well in advance down here that we were in an uptrend. And even though we're not picking the top, we would have known well in advance that we were in a downtrend prior to going all the way back down. So you see how this early trend detector can really help us determine the trend. It will increase our odds for consistency even more when applying the candlesticks. Now we look at a downtrend here, that same Snapchat chart that we were looking at. And before, we were looking to buy somewhere around here, and someone would say, well, Steve, how would we have known in advance we were in a downtrend? Well, you just click on the PET-D, and the PET-D was telling us well in advance that we're in a downtrend. Look at all the confluence of red bars up here, well before we fell out of bed. Well, how about Apple? Remember Apple was in an uptrend? Well, if you had used the PET-D with that, once you click on the green strategy tab of the PET-D, you see the colors change. Now, we didn't pick the bottom once again, but up here, we would have known well in advance not to take this short signal, this bearish engulfing pattern, because the bars are green. Why are you going against the current? Why are you swimming against the tide? Remember, you're going to have much better results if you're in sync with the trend as opposed to trading against it. So, let's talk about trading engulfing patterns in sync with the PET-D, because this is probably the most recognizable pattern there is. It's one of the simplest. And even though this technique of trading along with the trend can be applied to virtually any candlestick pattern, let's just talk about the simplest to identify, which are engulfing patterns, okay? Now, how are we going to use these? Well, let's say we get a bullish engulfing pattern. We're only going to buy if the engulfing bar, which is bar number 2, is colored green. Okay, that's it. Those are the rules of this technique. So as we see here, here is a bullish engulfing pattern. It's a 2-bar pattern. Bar number 1 is usually down. It doesn't have to be, but it's usually down. And then the range, the open to close range of bar number 2 engulfs the open to close range of bar number 1. Now, usually people will say, well, this is what I want to see at the bottom of a downtrend. Remember, we're not looking to pick bottoms. We're looking to be in sync with the trend. So how does the PET-D help us know if we're in sync with the trend? Well, you simply apply the PET-D, and you want to see that bar number 2 is colored or outlined green. Now, in this case, bar number 1 is also colored green, but that's okay. We're not concerned with that color or any of the previous bar's color. We're just concerned with bar number 2. If that bar is colored green, that's telling us it's okay to go long if you should decide to do so. Remember, you're in charge of your own trading. This is not a system. So let's look at this chart here and win. Someone looking at this would say, Steve, how can I trade this? There exactly is no trend here. We're in a range. But look what we have. We have a bullish engulfing pattern, okay? Now, if you wanted to trade this, you would have had to let go of your preconceived notions of trying to pick a bottom. Even though you say, well, Steve, there's no trend. We're in a range market. That's okay. The market, through this pattern, is telling you it may want to go higher. Now, all we have to do is confirm it with the Attendee. And as you can see, bar number 2 is colored green. It's outlined green. So that's all we need to know. We don't care what bar number 1 is colored. We don't care what all of these other bars are colored, even though they're green as well. That's a buy setup, okay? And the stock went up 12 points in the next week. Let's look at a bearish engulfing pattern. We're just going to flip the rules upside down because now we're looking for sell opportunities. But we're only going to sell if the engulfing bar, which is bar number 2, is colored red. So here's a generic example of a bearish engulfing pattern. It's a 2-bar pattern. Bar number 1 is usually up from open to close, and bar number 2's range from open to close engulfs bar number 1's range. Bar number 2 is usually down, okay? So that's the standard bearish engulfing pattern that most people look at the top of a trend. Well, we don't care about that. All we want to do is apply the Attendee and make sure that bar number 2 is colored red, like this. If you see this, this is telling you that you have a bearish engulfing pattern and it's confirmed by the Attendee that you're in a downtrend, that you're in sync with the trend. That's all you need to know. So let's look at this example here, an older example in First Solar. Obviously, we are in a downtrend. Now, the way we've been taught is to look for bullish engulfing patterns, such as right here. This is where we were taught, this is where you should buy because you're going to pick the bottom and you're going to make a ton of money as it goes straight up, right? Well, now that you know better, you would apply the Attendee. And what color is bar number 2? The engulfing bar, bar number 2, is red. So we have actually no interest in buying this, okay? And it was a good idea we didn't buy because look what happened. Now, we knew that we were in a downtrend way up here because all the bars were colored red. So now that we're colored red up here, rather than look for this bottom, why not take advantage of the bearish engulfing pattern here? Or how about the one that was right here? Do you see how you're going to have more consistency if you're trading with the trend at your back, okay? You're going to have a lot more consistency if you're going in sync with the market. Now, when we combine these two techniques of engulfing patterns with the Attendee, I should say, we create what we call our Candlestick Combo. This is a really, really powerful program we have here because it really has high levels of consistency because you have these two things that are really telling you that what the market wants to say or wants to do in terms of its pattern recognition. And then secondly, you're in sync with the trend in terms of the Attendee. Now, the beauty of this is that everything is one click away on our platform. I designed this with Pro Trader Strategies to make it simple. So you don't have to sit there and go, okay, let me scan and look at the thousands of stocks every night so that I can make sure I find a bullish engulfing pattern. And then I have to go through each one and calculate how the Attendee is, if it's green or red. Don't worry, everything is one click away. In a matter of minutes, you'll be able to see if you have this setup. All right, so let's look at some recent examples, okay? As we look here at these last 6 bars in letter B, someone would say, Steve, how can I have any clear idea what this is doing? I mean, we're just basically, for the past week, going sideways. There's absolutely nothing happening here. But what do we see? We have a bullish engulfing pattern here. The range from open to close of bar number 2 engulfs the range of bar number 1. But that's not enough for us to simply buy. We need to see if we're in sync with the trend. So we click on the Attendee, and all the bars are colored green. So this is more than enough to tell us that we're in an uptrend. Even though the novice would say, there's no trend here, we're going sideways, the person who just studies the markets and learns how to listen to the markets would know that the market is telling you on a tick-by-tick basis that it wants to go higher. So if you decided to, that would be a high probable trade there, and you could have jumped in, and as you see here, you had a nice move to the upside. All right? Now, it kind of stalled at this point, and what do we have here? We have our first red bar, not enough to tell us to sell, but guess what? There's a bullish, or I should say, a bearish engulfing pattern right here. And bar number 2 just happens to be colored red. So if you hadn't taken a profit and sold here, all right, it would be suggested probably to get out of this and to switch, or at least to exit your long position, because look what happened after that. Okay, see how the market is always telling you what it wants to do? It's just that we have to listen to it, but we're always trying to pick a top or a bottom, or listen to earnings reports, or listen to some trading guru in a chat room. Why don't you just listen to the market? Because most of the time it's telling you in advance what it wants to do. How about AN? All right, now here is a clear-cut downtrend. We don't need to use any technique or indicator to find that out. Now the way we've been taught is to look for a bottom in a downtrend. And what do we have? We have a bullish engulfing pattern here. On top of that, we have a morning star pattern, okay? So this is a double whammy. These are two very bullish patterns in the traditional sense of candlesticks. But remember, we're not going to trade candlesticks in the traditional sense because there's no consistency. We want to make sure we're in sync with the trend. Obviously, we're not. You wouldn't want to buy at the bottom. But just to make sure, we apply the pet D, and all of these bars have been colored red. Even the doji was colored outlined red, as well as the update was outlined red. So it would be advised not to take this, because the odds are it's not going to go up. And as you can see, you would have lost money holding on to that position. And once again, you would have asked yourself, you know, what's wrong with my candlestick trading? Why is it not working the way I was taught? How about Pepsi, PEP? All right. Here's an example of a bullish engulfing pattern, and it worked out fairly well. Okay. We applied the pet D, and we see the reason why is because bar number 2 was outlined green. So it went up for a couple of weeks, but then it's met by a red bar, and it just so happens to be bar number 2 in a bearish engulfing pattern. So we would suggest exiting your long, and if you don't want to go short, at least flatten out. But it's up to you. Remember, this is suggestions. We're not an advisory service, or we're not telling you how to trade. We're just telling you how to apply this technique. And as you can see, that would have been a wise suggestion because the market went lower. Now, had you missed that, don't worry. You would have been given another chance to go short right here with this bearish engulfing pattern as well. Now, here's an example in PSA. All right, the market's been going down. We have a bullish engulfing pattern. We've always been taught you want to pick a bottom. The engulfing patterns are reversal patterns, so we should buy this, right? Well, that's why we have the pet D for confirmation. We apply the pet D, and instantaneously the colors change. And guess what? They're all red. Even the updates are outlined red. So if you buy, you're going to be buying against the trend, which automatically is putting the odds out of your favor. So you shouldn't buy that. And guess what? That was a wise decision on your part. So you said, well, okay, well, I didn't have a trade. Well, yes, you did, because later on there was a sell signal right there. There was another one right here, another one right here. So see, the market is always giving you chances to get in. You just have to know how to look, how to be in sync with the trend. Let's look at Grumman. Okay, it's been going higher, and we have a bearish engulfing pattern right here. Now, normally we just say take that trade, but let's confirm it with the pet D. All right. Well, look how that didn't work out at all, because the pet D never confirmed it. In order to go short, bar number 2 should have been colored red, and it's colored green. So that's telling you that even though this was a down day, it's a down day in an uptrend. So don't go short. And that would have been very wise, because it continued to go higher. You most likely would have lost. It would have been much better simply to take these multiple bullish engulfing patterns that were all in sync with the trend. That bar number 2 was all colored green. Okay. Now, as it's going higher, all of a sudden it meets some resistance, and you start to have multiple red bars. If you hadn't exited, well, you could have gotten short right here, because that's a bearish engulfing pattern. Bar number 2's range engulfs bar number 1's range. All right, so the technique is giving you a sell setup, and look what happened after that. So you see, traders love to be victims. They love to say, gosh, I took that online candlestick course, or I paid $10,000 for that academy or institute I was supposed to be trading with, or I bought that $10,000 system, and nothing works. I keep losing money. It's because you're using things that really have no consistency, that most likely I've traded 40 years ago and still don't work to this day. And also, you're taking yourself out of the game. You're probably relying on institutions or volume or some convoluted indicators. Why not just rely on what the market's doing? Listen to the market. We're never taught to listen to the market. But our platform teaches you how to listen to the market by showing you these techniques that have stood the test of time and these tools such as the PET-D, because the PET-D is simply translating what the market wants to do. All right, let's look at Costco. Once again, a sideways market, and we have a bullish engulfing pattern. Should we take this? Well, we don't know yet. Let's apply the PET-D, and guess what? The PET-D is confirming it. It's outlined green. So let's say you bought on that close, and then look what happens. If you had a tight enough stop somewhere, you may have been stopped out. But let's say you're still holding on to the position. Well, it would probably be better not to, because what do we have here? We have the makings of a bearish engulfing pattern. So this is what we mean when we say our methods are consistent. We're trying to tell you that not every trade is a winner. We will have losses from time to time. That's perfectly okay. The beauty of our methods is their consistency. If you have a loss many times, you're able to reverse or switch or wait for the next setup, and you will be able to recoup your losses. Not guaranteed, but our students have gotten back to us saying that they have many chances to recoup their losses because of the consistency. So here you would have taken your loss on the first setup, and as you see here, there's another setup to go short now. Had you taken that, you could have recouped everything and even some more. All right, let's look at KLAC. All right, we're in a downtrend, not that strong, but still kind of moving lower, and we have a bullish engulfing pattern. All right, let's check and see what the PET-D is saying. The PET-D is saying that's not confirmed. All the bars have been red, and this bullish engulfing bar number 2 is outlined red. So it would probably be best not to take that long setup. And as you see here, look what happened. The very next bar, you have a bearish engulfing pattern. That is confirmed by the PET-D, so you may want to take that one, and that would have been a nice setup because the market went lower. Do you see how the PET-D is translating what the market wants to do? So why try to fight the market? I mean, that's simple. You don't want to catch a falling knife. You don't want to stand in the way of a speeding train coming your direction. But that's the way most traders trade. Why not just jump on board that train and ride it? Let's look at FAST. All right, we're kind of going sideways here to lower, and we have a number of bearish engulfing patterns. Should we have taken any one of these? Well, all you had to do is apply the PET-D, and you can see here that we have 1, 2, 3 confirmed bearish engulfing patterns. So it would have been up to you. Remember, this is not a system. We're not telling you what to do. It's your choice. We're just giving you the information that has shown high levels of consistency. And you could have taken any one of those if you decided to, and that would have been a wise decision because look what happened later on. If we look at PZZA, Papa John's, okay, this was heading higher, but roughly at the end of September, coming into the first week of October, it started to go sideways. A lot of people were saying, well, maybe it's going to roll over. It's overbought. It looks like it's going to fall out of bed. Well, we have a bearish engulfing pattern here. Maybe this is telling us to sell this because the stock is going to go lower. But after that bearish engulfing pattern, we have 2 bullish engulfing patterns. So which one should we take? Many times you'll see this and you'll say, which one am I supposed to take? This is how the PET-D can help you make that decision. You simply apply it, and you see that this bearish engulfing pattern did not meet the qualifications because bar number 2 is colored green. But these bullish engulfing patterns did because bar number 2 is outlined green, so it meets the standard. And as you can see, the stock went up 5 points the next day. Now, the reason why it went up 5 points, I believe, is because there were buyout rumors in the stock, all right? Now, it would have been very hard for us to know that because, news and news events and earnings and things of that nature are not required in any of our methods. So why would we know that it was going to get bought out? The CEO of the company didn't call me up and say, hey, Steve, issue a buy signal in our stock because we're going to get some buyout rumors in the next week or so. I had no idea. So someone would say, well, then how did you know to maybe have a buy setup in this? I said, I didn't. The market tells you. The market was telling us that we had 2 bullish engulfing patterns. They were both confirmed by the PET-D, so the market is telling me it wants to go higher. My job is simply to listen and then jump on board if I decide to do so. Here's an example in letter R, okay? Once again, we're going down lower and we're met with a bullish engulfing pattern. I know some of you are still saying, well, Steve, this is the way I've been trained. I don't want to, buy something if it's going higher. I want to buy something at the very low. Well, as I said, oftentimes you'll see some nice setups that way. But it's like the casinos. It's like I've said oftentimes, it's also like playing the slot machines. Every once in a while, you'll get a winner. And you think that you're doing okay. All the bells and whistles will go off and you'll say, hey, I'm doing pretty well. But if you stay there long enough, they're designed to take all your money. They just want to give you this false sense of security that you're doing all right, just so you'll stay longer and they'll be able to take all your money away from you. It's the same with trading against the trend, okay? As you can see here, had you bought this, you would have been going against the trend because the Attendee was saying the trend was lower. Bar number 2 was outlined red. So you would have, just like the slot machines, been having a bad gamble and you would have lost money, right? So there's no consistency in going against the trend. You would have done much better if you simply taken these two sell setups, which were bearish engulfing patterns, in sync with the trend. Or I should say HAS. We're only looking at 5 bars here. We have a bearish engulfing pattern, all right? Is this enough to tell us what to do? Not yet. We need to confirm it. Even with only 5 bars, we still have to confirm that, and guess what? The Attendee is confirming it. It's saying yes, bar number 2 is red. So look what happened. It's a nice trade. This was just October 3rd or 4th coming into the last week here. Now, I know a lot of you like to trade options or indexes and you're more interested in different time frames. That's fine. Let's look at entirely different markets here. ETFs, this is IWM. This is the ETF for the Russell 2000. It takes all the average of the Russell, of all the 2,000 stocks in the Russell 2000 index, and this is the stock that reflects that index, okay? Now, a lot of people love to play the victim game, saying, boy, this market this last couple of weeks has fallen out of bed. I lost a lot of money. I wish I would have known that it was going lower. Well, no one knows with 100% certainty whatever the market's going to do. But if you can listen to it, you can put the odds in your favor at times. And that's what we teach you, how to listen to the market. Now, we look here at IWM, the ETF for the Russell 2000, coming into October. It's kind of headed sideways to lower, but not giving us enough information. So we have a bullish engulfing pattern here. 99.9% of all traders that use candlesticks would have bought that, thinking that's a nice buy signal at the bottom of a downtrend. I should buy it right here, right? But now that you know the secret ingredient is to apply the Attendee, you would not have touched that with a 10-foot pole because bar number 2 is outlined red. So even though we didn't know how far down the market was going to go, we knew not to get involved. In fact, you would have missed all of that move to the downside and saved some money. Now, if you're a little bit more aggressive, you would have known as early as early to mid-September that there were multiple signals to go short. Look at these bearish engulfing patterns that were confirmed by the Attendee. So why be the victim? Why always blame some news or interest rates or something that's going on across the world economically to tell you that that's why you lost money? Why not just look at the market and say, well, the market's telling me it wants to go lower, so I guess I'm a seller now. Or I'll be on the sidelines till it tells me it wants to go higher. It's that simple. Now, if you trade a different time frame, here's a weekly chart of the QQQs coming into October. This is a weekly chart, and as we can see, all the bars were colored green. Could we have taken advantage of that? Well, just using this one candlestick pattern, look at the buy setups you could have taken advantage of, all right, all along the way. And guess what? The first week of October, a bearish engulfing pattern was just screaming out to sell, and you could have taken advantage of what happened in this last week or so. So the market is always telling you what it wants to do. Unfortunately, we don't listen to the market. We're listening to some guy in a chat room, some trading guru on TV. We're listening to the news events. We're listening to the institutions. And trust me, those things were all taught by all the classes I attended some 41 years ago, and that's the way I traded, and they didn't work for me then, so they're not going to start working miraculously right now, some 41 years later. I was lucky enough to have a couple of mentors that said, Steve, learn to listen to the market, and it will enable you to trade for decades down the road. And they were right. 41 years later, I'm still trading. I haven't looked at a news event in 41 years. I don't look at volume. I have only one screen on my computer. I don't look at multiple markets. I just look at the market I'm trading at that moment. Now, people think, well, will this work with news? Remember, as I said earlier, nothing is 100% foolproof. Nothing works 100% of the time. You will have losses. It's been our experience, though, that many times the market will tell you in advance of news events. Remember Papa John's, before that buyout rumor came out, you had multiple buy setups and the trend was already going up. Well, let's see what happened here in Amazon, okay? On the 4th of September, about a little over a month ago, Yahoo Finance announced that Amazon is now a $1 trillion company, okay? It became the second member of the $1 trillion club. The first was Apple. So this was on September 4th. As we look at the chart, here was the day that that news came out, all right? And we're looking at a weekly chart, by the way. Could we have taken advantage of this if we were an investor? Well, as we see here, we have a bullish engulfing pattern. But remember the way we're trained. We're always look for bullish engulfing patterns at the bottom of a downtrend. At the time, this was at the top of an uptrend. How could we have taken that? Well, you have to let go of those old preconceived notions because there's no consistency. All you have to do is apply the pet D, and you see that all the bars have been green, especially bar number 2 here. So a candlestick combo buy signal was generated 2 months before that news came out. So even though this is not guaranteed, we're not predicting how high something will go or how low something will go. We're just trying to get you in sync with the trend. That's how you will become a consistent trader. Okay, so let's recap before we go to question and answer. Only buy or sell candlestick patterns, any candlestick pattern, that are in sync with the pet D. You're going to add or increase your consistency if you're in sync with the trend. Now, sure, you can use a moving average, you can use higher highs, higher lows, you can use the daily chart can be confirmed by a weekly chart, but those are all lagging tools. The early trend detector, the pet D, will tell you in advance many times when a trend is underway. That's what it was designed for, because it's translating what the market wants to do. So ask yourself, do you think this method could have helped your trading this past year? We really only have a couple of months left in 2019. Okay, ask yourself, are you anywhere near where you thought you'd be at the, or I should say, 2018? Are you anywhere near where you thought you'd be at the beginning of 2018? 2019 starts in a couple of months. Okay, are we going to go through the entire process again and say, well, here I go again. Boy, I hope I have enough money to last for this year. You owe it to yourself to become a consistent trader. But there are extremely important points to remember if you're going to use this method. What I shared with you today is not a complete strategy. This is called a technique because we're just identifying high probability entry points. We did not talk at all about where to enter. You know, would you enter at the close of bar number 2? Would you buy as it went higher? Would you place a lower order to buy at a lower price? You know, it's all up to you. We didn't talk about stop placement. All right, where would you protect yourself? Now, as I said earlier, some of the trades are not winners, so how would you know where to place your stop at the most advantageous point? Or how about exiting? You know, would you want to take a quick point or two and get out, or take full advantage of some of those big moves? Well, lastly, we didn't talk about money management. All right, how many shares, how many contracts would you be trading? These are all extremely important pieces of the puzzle that make up a strategy. What I shared with you today, remember, is not a strategy. It's simply a technique designed to spotlight a very fertile or high probability entry point. But how you decide to get in, how you decide to get out, how you decide to protect yourself is all entirely up to you. So it can be a little dicey. I know you want to experiment and see if you could use this on your own. Wouldn't you like to use something that I've been using for 4 decades now? Well, here's our special discount we have for all the attendees today to get your trading on track for the new year that's going to happen in just a couple of months. We're going to offer you our strategy number 5. That's our candlestick strategy and the pet D tool. This is our candlestick combo special. You're going to get instant course access, detailed instruction, roughly about 20 online videos that we send you the link to that you have your access. You can watch whenever you'd like on your lunch hour, on the weekends. They're always made available to you. You don't have to wait for CDs to be delivered in the mail. It's going to be delivered to you immediately online. You'll learn all the entries, all the exits, all the stop placement, entire course rules. On top of that, you're going to get the pet D tool. You're going to get access to all the different trading techniques with the pet D. There are 4 more trading techniques, including stop placement techniques. All right. You're also going to get strategy coaching. And for any time you don't understand something or you'd like a little help, you still are paper trading and you're not sure how to jump in yet, you can always email me with a private email address and I'll be there to answer any question that you may have. Now, we're going to give you a great offer today. this usually runs for thousands of dollars. We have an attendee discount, $14.95, a one-time fee plus $97 per month. That's it. It's a limited time only. But as you've seen in the examples I gave you, look how consistent this was this past month, even this past week with some of the examples I shared with you. Now, if you want to just skip the payment plan altogether and purchase it with no lease at all, it would be $29.95, a one-time payment, all right? Now, we're not going to just stop there, though. We're going to increase this deal a little bit better. We're going to throw in 6 months of the PTS Primo chart for a great discount. Now, that would usually cost you $600. Don't worry, we're not going to charge you any more money. We're going to throw in 6 months of our platform totally free. So there's nothing you have to do. Everything is already pre-canned. All you have to do is click on the Pet D, click on Strategy 5. You'll see the up and down arrows. You'll see the bars automatically change color. But that's just not the only thing included in the platform. You're going to get the strategy, the Pet D tool, our proprietary buy-sell line, which tells you automatically what the overall trend is. Remember, the Pet D is the short-term trend, but you're also going to find the overall trend as well. And many times, if these two are in sync, you'll even increase your odds for consistency even more. You're going to get our top-bottom 25% feature, which looks at bars that close either in the top or bottom 25% of their range. These are great price pattern tools to tell you when to enter and also tell you another way to look at the short-term trend. Over 90 of the most prominent technical indicators. You get free Bloomberg TV. We have a media page where all you do is click on the icon and you're going to get on your screen a live viewing of economic indicators, of economic news, anything that's happening fundamentally as it's happening in real time. And then personalized tech support. If you have any technical issues, we will be there in moments to resolve them for you. We're throwing in another bonus. We're not going to just stop there. We're also going to include what I'm really proud of, I think the most about our platform is our scanner. All right, if you're not able to be in front of your computer at all times, we have a very simple but powerful scanner that will scan automatically for Candlestick Combo setups. You'll know in a matter of seconds what the setups are for the next day. For example, this is how easy it is. You would simply click on, in the green strategy tab, click on Strategy 5. This drop-down menu appears, and where you see Scan, just click that on, and this window appears. All you have to do is scan the list of whatever stocks or forex pairs or currency pairs or futures or Bitcoin, whatever market you're interested in, and it will automatically generate the signals, the buy and sell signals for the next day, or even for the next hour. You can do it intraday as well. Now, we're looking back in time. Here's an older example in letter W of a signal that was scanned the night before and generated a buy signal. All right. This was a strategy number 5 buy signal. We apply the Pet D and we see that it was confirmed. The stock went up 10 points in the next 2 weeks. Okay. You could have found that out that was a viable candidate the night before. And if you missed that, there were more setups later on coming into September and October. Now, you can also scan other markets. Let's say you're looking out here today and you say, well, Steve, I don't trade stocks. Well, that's okay. Here's the Canadian dollar. All right. Looking at this, it doesn't look like there's much direction in the Canadian dollar, but if you scan the night before, you see that the Pet D is green and you had 2 buy signals here. All right. So you could elect to take them if you'd like, but that would have been a nice decision. 350 pips in the next couple of days, or weeks, I should say. A sell signal was generated using Strategy 5 and the Pet D on a 4-hour chart of the dollar-yen. You could be scanning this on a 4-hour basis and 100 pips to the downside in the next couple of days. We can also scan on a 10-minute chart of the E-mini futures. Markets going lower, the Pet D turns red, and we have scanning of a sell signal right here using the Candlestick Combo. 20 points to the downside in the next couple of hours. That's $1,000 per contract. Here's a 1-hour chart of the E-mini futures. As you can see, we have a nice uptrend. Could we have taken advantage of that? Could the scanner have scanned for any setups? Well, look at all the buy signals you could have scanned for on this hourly chart. Trust me, a year from today, you will have wished you became a member of this course. Remember, when we get to October, mid-October, beginning of November in 2019, you don't want to be where you are right now. If you're treading water, that actually won't be bad. But what if you're losing a lot more money? You owe it to yourself to get your trading back on track and to become a consistent trader. I really strongly believe this candlestick combination can really help you get on that direction. So once again, strategy number 5 and the PET-D tool, along with our 6 months of our PTS Primo charting platform for free. This includes a scanner and the other features that are on. If you want to take advantage of that discount, it's only $14.95 plus $97 per month. If you want to just have a one-time fee, it's $29.95. Now, I would suggest contacting Pro Trader Strategies. I developed all of my courses and the platform with them. They handle all of the marketing and the discounts. If you're looking for possibly a discount or some type of payment plan, contact them. They have manned trading consultants manning the phones right now. They can talk to you, explain more to you, and you can possibly work out some type of a different payment schedule if you're not able to meet those needs. But they're always willing to work for you. They're always willing to listen to you, and they're traders themselves, so they can help you with looking for whatever you're interested in. You can email them at trading@protraderstrategies.com or call them directly at area code 310-598-6677. Now, if you're interested in finding out more information or quickly signing up, here's the link at the very bottom. You can copy and paste this onto your browser or simply go to the chat box on the far right-hand side of the GoToWebinar column. They just uploaded the link there, and that's a live link, and you can just simply click that on, and it will explain everything there for you. Now, as I promised, I would answer each and every one of your questions, so I'm going to leave this page up here so that you can copy down the link or you can copy down the phone number, and then I'll open up the question and answer here. Okay, questions. Engulfing is only the body, not the wicks, right? Very good question. Yes, engulfing is only the body. So in other words, for those of you who aren't familiar, let's say you have a bullish engulfing pattern, all right? Bar number 1 typically is down. From open to close is down. So say it's opened at 50, well, it closed maybe at 49, down 1 point, okay, let's say. Now, bar number 2 opens to close is higher. So let's say it opened at 48, down a point lower, but then closed at 50 or 51, okay? It either matched or increased the range of the previous day's body. Now, we're not concerned with the range of the day. Let's say, you know, the previous day's close, or I should say open, was 50, but the high was maybe 55. We're not concerned of engulfing, you know, 55. I know a lot of people use that as an extreme reference, but we're only concerned with bar number 2 engulfing the open to close range of bar number 1. And this is the same thing with the bearish engulfing patterns, okay? So bar number 1 is usually up. Let's say we opened at 50 and closed at 51, so we're up a point. Now the next day we opened at 52, but we closed at 48. So bar number 2 now is down on the day, and it totally engulfed the open to close range of bar number 1. That's a valid bearish engulfing. We're not concerned with the ranges, the wicks. Okay, that's a very good question. It's an uptrend, even though you don't have to have a buy or sell line. Nelson is asking about the buy or sell line, and that's a proprietary way we have to define the overall trend. As I stated, if you want to use the overall trend in conjunction with the short-term trend, which is the PET-D, that's perfectly admissible. It's a more conservative way of trading this, which we teach our students in the beginning because we want you to start off slowly before you advance. But ultimately, after you've learned the ropes of the candlestick combo, you can decide to use both of these trends in sync or just one. It's entirely up to you, okay? Remember, you're in charge of your own trading. Jim is asking, what does each letter in the PET-D stand for? That is a very secret definition. We cannot put that out. No, I'm just kidding, Jim. That stands for the Primo Early Trend Detector. And the reason why we put my name to it is because when I learned this 41 years ago on the floor, when my mentors taught me this, it was simply known as the formula. It was something we had to calculate. And, you know, it wasn't really difficult. It was just very cumbersome. It was something that, you know, took some detail. And, you know, when we were on the floor trading, it was something that, you know, we were trading in and out of positions every minute. You know, I'd buy something, I'd buy 1,000 shares of stock, and I'd sell it a minute later. And so it's kind of difficult to continue watching, you know, on a tick-by-tick basis what the market's doing. So we've taken all that hard work out of it for you. We've made it a proprietary color bar tool so that all you have to do is click it on our platform, and you know by the colors if the market is telling you it wants to be going higher or if it wants to be going lower. Because once again, it's simply a translator. It is simply translating what the market wants to do. This is not a predictive tool. It does not give you buy signals. It does not give you sell signals. It gives you techniques, sure, but those are not full-fledged strategies. It's simply relaying what the market wants to do. And it translates this through the colors. So we made it really simple. And guess what? We even simplified it more by creating our platform, which I'm extremely proud of, because it's one click away. You know, you don't have to do anything. You don't have to upload and add on. You don't have to make sure it doesn't mess up with your current platform. And sometimes there's some issues where the platform you're using won't take it or will give you different colors. And you're saying, how come it doesn't look like the way Steve had on his screen? Well, guess what? I use our platform exclusively. So all you have to do is use it and you'll see the same results as what I've showed you here today. That's how simple it is. So it's a great, great tool. We've taken all the hard work out of it for you. And I personally use it every day. I was using it today prior to today's presentation when I was trading myself. I like to intraday trade with the PET-D, and I used it today as well. So it's a great tool along with the Candlestick Combo strategy. I really think you're going to increase your odds for consistency, okay? We're not promising the world. We're not like other presenters that say you're going to be able to retire by the end of the year, or the statistics say that you'll generate thousands of %. No, we don't believe in that. There are no statistics to back this up because we want everyone to trade according to their means, all right? We give all, in our course, someone is asking here about the entries. We give different entry variables. So you can decide to enter the traditional way of the strategy. You can enter with a more conservative way to get better risk-reward ratio. You can enter more aggressively. You can also use that for your exit. You can use different exit variables, all right? You can also have different stop placement variables. So there's multiple ways to trade this. We can't keep statistics on each and every one for each and every market for each and every time frame. What we want to do is encourage you to find out what feels comfortable for you, because that is what will make you make your own decisions. You won't be trading something that you don't feel comfortable with. So we offer you all these different variables for entries, exits, stop placement so that you can say, you know what, this is the way I'm going to enter, this is where I'm going to exit, this is the way I'm going to place my stop. And you can change with each setup. It's entirely up to you. So that's the way, in my opinion, one becomes a consistent trader. Not by blindly following a system or by going to a chat room where someone tells you what they're buying to buy here and to sell here. You're basically saying, I don't know what to do, tell me what to do. And that's no way to use your hard-earned money. You should be in charge of the decision-making process. Okay, as we get to the end here, I hope you got something out of today's presentation. You learned a little bit what I strongly feel is the correct way to trade candlesticks. And I hope you saw the attention to detail we give to really try to teach you, because we are an educational company. We're not here just trying to sell you a bill of goods and say, thanks a lot, see you later, good luck. We really want to see you progress. We really want to see you become a consistent trader. It'll be better for everyone involved. There's enough profits around for everyone. It's not a finite amount of profits you can make and then that's it. There's enough for everyone to go around. And so why not share what we've learned that has helped us, so hopefully it can help you. Remember, the new year starts in just a couple of months. This is a great way to start off in the right direction and to kick your trading off in the right direction for 2019, okay? As we close, once again, if you have any more questions, don't worry. You can always contact Pro Trader Strategies. They'll answer any question concerning the method, as well as platform issues, as well as discounts and payment plans. They'd be more than happy to discuss those things with you, okay? Thank you so much for attending. I really thank you for spending time out of your Wednesday here and coming to listen to me speak. I hope you got something out of today's educational presentation. I wish you the best of luck as you take one last look at our disclaimer. But most importantly, I look forward to all of you becoming students of mine in the Candlestick Combo and our new platform. Thank you so much for attending today. I'll see you next time. Bye-bye.